But we realized we actually had a shot at being the best in the world at providing high quality, very low cost, comprehensive financial planning, human driven.
Mm.
And so, we really, I think, doubled our focus to figure out, okay, how can tech support the advisor relationship and help us scale, help us keep our costs low to allow the advisors to really shine.
Welcome, Model FA's David DeSell here, CEO of Model FA and your host of the Model FA podcast. And we are joined today by Eric Simonson. And I'm excited about this conversation for really two main reasons. So Eric owns Abundo Wealth, and he has a pretty cool story that we're going to unpack today as how he grew his business to about 650 total clients, including husband and wife, but a total of about 400 subscriptions in just a mere 4 years. So on average, 100 new clients a year, which is just mind boggling. So really excited to unpack how he got to that point, how he manages that on a go forward basis. And then another topic that is a little outside the scope of our normal conversations, but I think would be very interesting, is how you can use credit card points as a piece of the overall financial plan, and also how to travel hack a little bit. So we're going to unpack all that with Eric today, but let's give a warm welcome to Eric. Welcome to the show.
Hey, thank you, David. I'm happy to be here.
Awesome. Well, I guess, how did you get started? Did you graduate school and start Abundo Wealth, or what was like your first step upon graduation?
Well, gosh, I appreciate you implying that I might be young enough to have graduated recently. I, if we want to start at graduation, I became an intern at a broker dealer, big broker dealer in Minneapolis, Minnesota, and worked my way up from intern to planning assistant, got licensed, became a paraplanner. Then I became a junior advisor. Then I became an advisor. Then I was made a partner at that firm. And all said and done, I worked there for 12 years, helped grow a traditional kind of AUM business from $30 million of assets to $300 million of assets. And then in end of 2019, left that and started Abundo.
Very nice. And what was the turning point or the precipice of, I mean, it's not like you were just a staff member of this other firm, right? You were a partner. What kind of prompted the transition from being a part of that firm to ultimately running your own firm?
Yeah, it was a super tough decision. I certainly could have stayed there and been set up for life. It was good income and stable, right? There was really no risk with that. But ultimately, I was really just drawn to serve more people that I felt like traditionally didn't have access to financial advice. We were a traditional AUM shop that had a minimum of, at first it was $250,000 and then it was $500,000. And then we were talking about going to $1 million. And so, the only people that we were really helping were multimillionaires. And I looked around and I saw a lot of people who needed good advice, who just couldn't get it. And that didn't sit with me. I really felt like there needed to be a model that allowed those people to get advice. So that was one big kind of pressing reason why I decided to hang my own shingle. The other was, I saw over my 12 years, I saw that fee compression was a thing, right? And more clients, more and more prospects were, questioning, hey, what am I paying? What are my AUM fees? What are my other fees? What's my all-in cost? And, I saw the rise of, Betterment and Vanguard and really low cost investing all around me, but that wasn't something that we could do within that firm. And so I thought, I'd love to marry these ideas of helping people take advantage of these low cost investment options while also providing advice to anybody who wants it. And that is the kind of the impetus for what allowed me to start Abundo.
Excellent. And before we go through how you acquired all these clients in fairly short order, what does your team look like now? I'd imagine managing, 650 people, 400 or so subscriptions. I imagine you're not doing this by yourself. What's the team look like?
I'm decidedly not doing this by myself. Yes. We have 7 advisors. We actually hired 4 advisors last year. So kind of rapid growth over the past 12 months. And yeah, 7 advisors. And then on top of that, we have a unlicensed team member who his job is really product development. So we build a lot of our own tools in house, and so he's a programmer. He does that full time, and then we also have a marketing, a new as of about 2 months ago, a new fully dedicated marketing specialist who does social media uh, posting.
Awesome. Yeah, I feel like I hear more and more advisors, and my most recent conversation, a good friend of mine launched a CPA firm this year, and his first hire was actually a software developer. And I've heard more and more advisors, bringing those types of folks into the fold, to sort of own their own platform and be in control of the user experience. So that's pretty cool that you're doing something similar. What sort of tech or systems is that person putting together to help support the business?
Yeah, to reiterate your point, he was actually employee number 1 in the business. He
Oh,
joined
cool.
me. Yeah, he joined me really only about 3 months after I launched, and now I really consider him more of a co-founder, just because he's been really, really impactful with what we've done in the business. And I will tell anybody, any of your listeners, right, that nowadays with AI and with just so many great user efficiency tools out there, there's really no reason to have a paraplanner or really to have like an assistant. As sad as that is, you're right. That I was one of those for a long time. But I don't see that as really an important hire anymore. I think a better hire is figuring out, hey, how can have a tech person on the team to help you utilize all these things really, really well. So yeah, I agree with what you're saying. But to answer your question, what he has built, gosh, most importantly, he built, with really the help of everybody on the team, CRM. So we have our own custom CRM that is awesome. And that helps us manage really everything related to our client relationships. Um, he built an internal client portal so clients can log on and have access to a lot of different awesome resources and tools to enhance the relationship with their advisor and with Abundo. We've got just lots of other ideas in the hopper of things to build, including our own financial planning software. He just built an app that we're actually releasing this week, that our clients can download and use to view their tasks and schedule meetings with advisors and lots of other cool stuff.
Do you have any intentions, just out of curiosity, of keeping all this in-house or spinning off maybe a SaaS model for other advisors that may want to plug into the infrastructure that you're building?
Yeah, we originally built these certainly just with the intention of supporting our growth and figuring out how can we scale and how can we continue to keep our prices really, really low. But we're really proud of what we built, and we do feel like it would hold up really well against other CRMs. And it's, we have it fully plugged into AI and, lots of really, really sweet features. And so, yeah, we have thought about it, and we've actually thought about, if we wanted to lease our technology in the future, that could be a way that we could then actually subsidize the financial planning side of our business to keep our costs really low and maybe even lower, to serve more people and to make a bigger impact in the world.
Love it. Well, if you end up going that route, let me know. We'll have you back on to talk about it. But let's talk about the journey over a 4-year period to bringing on 400 subscriptions, 650 total clients. I feel like that's a lot in a good way, like nice work. But what did that look like as far as how did you market to these folks? What were some of your business development strategies? Because I know there's a lot of folks listening right now who are salivating, right? Oh gosh, if I had 400 subscriptions, life is great. how did you market to those folks? How did you develop that business? Like what's the secret sauce?
Um, well, yeah, I would say first of all, it wasn't 100 clients each year for 4 years. It was, first kind of 3 months, um, about 25 clients, 30 clients. And then the first full year, 60 clients. And then second full year, 120 clients. And then last year, it was just shy of 240 clients. So really, we're kind of doubling every year. And so this year, if we did it again, it would be almost 500 new clients, new subscriptions this year. Um, which is our goal. I mean, we really want to keep kind of pressing the pedal down and growing as quick as we can. The secret sauce, David, that's something I get asked, of course, a lot, and I would say we've actually probably been, you won't believe me, but we've probably been really bad in terms of just our marketing, and we've done really aggressively very little up until about 2 months ago to market. It's really all been just two things. It's been client referrals. So we've done a really great job of um, delivering value to our clients, but also communicating. Important point here. Communicating to those clients that we are growing and how different we are, and how how if they referred people to us, like they're going to continue to get a great experience and they're going to actually benefit working with us from a cost standpoint more than if they worked with a different advisor. um, and so it's really just leaning on referrals for our clients. And then similar to that, we've also gotten a lot of advisor referrals. So we are fortunate that we have a lot of advisors across the country who have models where they have minimums, or maybe they're priced in such a way that they won't work with somebody unless they pay them their minimum fee. And so they actually send those prospects that aren't a good fit for their businesses to us because our price point's a little bit lower. And again, we don't have any sort of AUM requirements.
So there's a lot to unpack there, and I think very interesting take. Or I guess let me ask for clarification purposes, and you may not know this exact number off the top of your head, but at least sort of like a gut check. Of the 400 subscriptions that you currently have, how many of those would you say came from referrals from other advisors where perhaps that client wasn't a good fit for their business model?
Probably 80 to 100.
So 25% roughly of your subscriptions, which is wild
Yep.
to think about. And what's cool about that is oftentimes advisors are focused on building COI style relationships with your typical CPA, attorney, realtor, loan officer, et cetera. And perhaps you're doing that as well, but it seems like you've done a really good job marketing yourself to the advisor community itself, and making a name for yourself. Walk me down that path. Like, where are you hanging out, so to speak? I'd imagine it's not just networking events, but you're probably hanging out in certain areas online to be able to make a name for yourself. Where's that coming from?
Yeah, David, again, I'm not doing as good of a job as maybe you think. I mean, we've
Well, your
made a name.
results say you are. So if you're stumbling in the right direction, that's
Yeah,
good as well.
we I am a fairly significant introvert. I don't love, networking. I don't, it's not really my favorite thing. I would say a lot of the advisor referrals that we've received has been other advisors who find us. They might find us through, an XYPN search, or through a NAPFA search, or even through just a Google search, advisors near me. They land on our website and they're like, oh, wow, this advisor, this team is doing something a little different. They might be a good fit for people who don't want to work with me. So that, a lot of them has really reached out organically to us. And then we've had other advisors who have been big cheerleaders of what we're doing. I can probably name 5 or 6 advisors who who are really, in the fan club. They tell other people about us. They're like, hey, do you guys refer people to Abundo? You should. They're trying to do something really special. And so we've had a lot of really wonderful, yeah, I would say advisor cheerleaders.
Love it. Now, going to the referral piece, I really like, you didn't say these exact words, but it made me think of a phrase that I really attached to, which is you have not because you ask not, right? Meaning if you're not getting referrals, the first question that I ask people are well, are you asking? And you may or may not be surprised that oftentimes the answer is no. So I can certainly appreciate the constant communication, as you mentioned. Hey, we're open for business, and sometimes that's all it takes. You don't necessarily need to bring clients through this fancy prospecting process. You can just let them know, and assuming that you're giving them not just a level of service, but a level of experience that frankly is worth talking about, then that sometimes is all you need. But I'm curious because you obviously need clients to get referrals. So, you got, I think you said 25 clients or so in the first few months of business. Did you have folks follow you from your previous firm as like the initial seed, or how did you break that
Yeah.
initial ice?
Yeah, I worked out an agreement with my prior firm where I did essentially take with me 10 initial clients who I'd worked with for years and who I knew loved me and were supporters of me. And so those initial 10 folks were really the driver of some of that first growth, right? Once they saw that I started on my own, once they knew that I wanted them to come with me in this journey, right? They were really supportive, and they recommended, hey, friends and family, you should go check this guy out. He's doing something really cool.
Yeah, I think for those of you who are listening that are maybe at a current setup and you're looking to go out on your own or make some sort of change, the common fear that I hear, and I've helped multiple advisors transition from the broker dealer space on their own or from a larger RIA on their own. And the common fear is, what if my clients don't join me? And you had worked out a deal with your firm, which helps it become a little bit more predictable. But even when the folks that I've helped transition, even when they don't have that sort of deal in place, 95% of the people that they would want to come with them come with them. And I feel like a lot of advisors sometimes discount the value that the relationship has. Like they're not doing business with the company, they're doing
Yeah.
business with you. And what I also like about what you shared is when you go out on your own, there's almost a sense of like the clients being proud of you for taking that step,
Yeah.
and almost like a sense of not necessarily
Ownership.
put on by you, ownership and
Yeah.
obligation to help and make sure that you succeed.
Yep.
And I'm willing to bet between that vibe that I just covered, and I would imagine to work with you was probably more cost effective for them in the long
Correct.
term and sometimes in the immediate term, to where I would imagine that your referrals from them post transition went through the roof compared to the referrals that perhaps you had received when you were working with them at the other firm. Is that a fair statement?
That's a wonderful assessment. I think is very accurate. Yes.
Um, and when you're working with these folks, one of the things that I've seen, and I'd like you to hopefully kind of dispel uh, the fear that I have with when advisors want to go out purely on subscription, right? So when you think about the AUM model, um, sure, they know what the percentage fee is that they're paying. Maybe they forget that over time, but when you bring them on, they're aware of that. And the beauty of that model, for what it's worth, is they don't really see that fee coming out. It's not like a debit from their checking account or their credit card. However, with the subscription model, they see that come out of their account, right? On a, however you charge, on a monthly basis, quarterly basis, whatever. And I have this thought that those relationships that are in that subscription model may not be as sticky as the AUM model, because you're doing a good thing, which is making prices incredibly transparent, right?
Mm-hmm.
What's been your experience over the last 4 years? Do you feel as if you're fighting to keep them on, or how are you structuring your practice management process in such a way to perpetually add value before the initial heavy lifting of doing the planning, and then the planning becomes more, for lack of a better way to put it, in sort of maintenance mode, to where people could fall off because they got what they needed, so to speak? How do you address that?
Yeah. Well, you're right. AUM definitely is. It's easier for clients to not really see that. It's out of not top of mind. But we're really proud of that challenge of saying this is your fee. This is what you're paying every month, and it's coming out of your bank account. It's coming out of your credit card, right? You really see it, and I was worried, to your point, right? When I started, I was like, gosh, people just gonna sign up and leave, in 2 months, 3 months. And I was actually quite shocked. We didn't have a single client leave in the first 2 years of the business. And so, by then we had 100-ish clients and not a single one had left. And I was actually kind of freaking out. I was like, what is happening? And, fast forward, another 2 years, now 4 years in, we're still running pretty consistently around like a 98.9, right around 99% month over month client retention. And so, we obviously track it, and we feel like it's good. I think an AUM firm, it's probably going to be something similar in terms of client retention, maybe slightly better, but it's not like a significant difference. Now, I can't say that that is going to be the experience that everybody has. We are very intentional about trying to create value on an ongoing basis. We have a lot of things that we're doing in terms of making sure that we're talking about clients, or we're talking to clients about not only what their recommendations are now, but also what's going to be coming up. What's happening in 2 years, what's coming up in 3 years and 5 years, that is going to be a really important advice point for them. If you want to buy a house in 3 years, right? Like, the year in which you buy that house, there's going to be a lot that we need to unpack in terms of what are interest rates doing, how much should you put down, what's the economy like, what's your job situation like, how much house can you afford, et cetera. It's not something we can say, here's your recommendation now for 3 years out. It's really a year by year evaluation. And I'm a really, really passionate believer that financial planning is best done in an ongoing basis. Even if you do one-time plans, I still think it's worthwhile to do one-time plans every year or every couple of years. Yeah, I think there's always things changing in people's lives. Family changes, job changes, legislative changes, tax changes, stock market changes. And I think our team does a really good job of just making sure clients realize that too.
And one of the things that I also hear from folks is, they're worried that because they're paying every month, that the client's going to want to meet every month. And I see on your website over here that as part of the deal, there's unlimited meetings and email correspondence. My guess, because I tell all my clients that as well, and some of them take me up on that. And those are the ones that tend to make the most progress because they're engaged. But a lot of people don't take me up on that. And I think a lot of folks are worried about, okay, I'm going to get to a point where I am just purely strung out and at capacity because I'm giving access to these folks whenever they want. What's been your experience with clients actually taking you up on that offer to the point where it may become a problem in terms of bandwidth?
Yeah, That was another, of course, fear I had when I started of, what's going to happen? Are people going to meet with me every 4 days? And now with 400 subscriptions, 650 kind of people that we help, it's been, we have a lot of data around this. And well, the averages are in the first year with a client, we're meeting about 4 to 5 times. And that includes, the initial meeting, the plan presentation meeting, the follow-up meetings. So obviously in the first year with any advisor client relationship, there's going to be a little bit more work. But then after that, really it's about 3 meetings a year is the average. And so we've got some clients who are very happy, quite a few clients, very happy to do every 6 months. That's their kind of cadence. Other clients, we like to meet every quarter. Other clients, we like to do a big once a year check-in. It's really, what we do is we just have a conversation with that particular client and say, hey, what's the meeting cadence you would like? And if the important thing I'd like to say is if they want to meet really often, let's say they want to meet every other month or even every month, it doesn't need to be an hour-long meeting every
Mm-hmm.
month. It can be a 15-minute check-in, which can be a really productive session for, most people every month, right? And that is totally fine. And so I would say the few instances over the past 4 years of people who maybe borderline like abused, quote unquote, the unlimited access, all those people, they just had a lot of stuff, either anxiety around money or just a lot going on. And they worked through it with us. And now they are like, once a year is fine. They've all kind of settled in to a cadence that is a little bit more mellow. And so nobody is like, for year over year over year, been like a huge abuser of it.
Well, that's probably a cool thing to be a part of, seeing how, because to your point, if there's constant communication, usually there's some underlying anxiety around their finances. And to see them not need that anymore
Yeah.
is probably incredibly, incredibly rewarding.
Yeah, exactly. Yeah.
That's cool.
And so we're very, we don't say no. We are not going to ever say, hey, you can't meet with us. Cause we always recognize there's a reason why people have hired us. There's a reason why they want to meet. There's something going on in their life that we can still help them with. And we want to do that.
Cool. And how are you? So there's the unscalable way to provide an experience, which is intentionally advancing individual relationships along from, new client all the way to raving fan. And there's probably certain special things you're doing on an individual basis, but in a leveraged way, right? So with 650 people, how are you communicating with them in between meetings? Is it email campaigns to add value? Is it social content? Is it random check-ins? Like, how are you continuing to stay relevant with these folks to A, make sure the relationship is sticky,
Mm-hmm.
and B, stay relevant for the purpose of being able to get a referral
Yep.
because you're relevant at that moment when something comes up with someone in their world? How are you communicating in a leveraged manner?
Yeah. We do all of those things you just mentioned. We have a client newsletter that we get a lot of positive feedback on that people really like. We do also a minimum of a 60-day check-in. So we actually, in our CRM, we've got kind of a list of any clients that we haven't had any contact with in 60 days. They show up on the advisor dashboard, and that advisor is directed to reach out to them to check in on tasks or schedule a meeting, whatever makes sense. So we, constant contact that way. We also just started, in fact, last night, we had our first client webinar. And so we're going to start hosting monthly webinars for clients. Last night's was on financial independence, early retirement. One of our advisors, Chris Mamula, he actually wrote the book Choose FI. And so he presented on that topic for our clients. And we had about 75 folks that signed up for it. And that was awesome. And so we're going to continue to do those. And yeah, just, again, we want to provide value. We want to help our clients both one-on-one, but also with content as often as we can.
So I have an idea for you since you started those webinars.
Yeah,
Have have you heard of Blake Brewer at Legacy Leathers by chance?
I have not.
So we had him on our podcast a while ago, and I'll actually put this link in the chat for you so you have it. Just click on that and review that later. But he has a company called the Legacy Leather Challenge, and he had this experience growing up as a kid where he was on the family vacation. He was out in the ocean swimming with his father, and unfortunately, his father ended up drowning and dying. And his mom, after that had happened, said, "Hey, here's a letter from your dad that he planned to give you on this trip." And it was a legacy letter of sort, type of note, which is, basically telling him how much he loves him and how proud he is and the values that he wants him to hold on to from the family and this whole thing, right? And it left a lasting impression on him. So now what he does is he helps moms and dads put together their legacy letter. So when you think about it, you probably have a hand in helping folks with their estate plan. And that's all the logistics of their money and their wishes and things like that. But there's no like defined process to be able to pass down your values. And he has sort of a little mini course that he can speak to in a virtual or live format, or folks can just hop on and sign on to. So my thought, and forgive me for imposing something on you, but my thought would be if you're going to continue to do these webinars on a go forward basis, an amazing way to add value to your client base outside of the scope of what you're compensated to do. And I'm willing to bet that you can get a lot of their friends to join the webinar too, which obviously has the potential for, new clients, and walking them through the legacy letter, I think could be a good webinar for you. That's very, very well received when folks roll that out. So
Awesome.
again, forgive me for imposing, but I couldn't help myself. I popped into my mind right away. I think would be very well received by your clients.
I will check it out.
Awesome. So all that stuff sounds wonderful, and it's also cool to see or to hear from you how I feel like I get the sense that you and your team are not just focused heavily on growth, but you're also focused on, for lack of a better way to put it, like tinkering behind the scenes of how can we continue to level up over time. Like you just hired a marketing person, I think you mentioned earlier, where I'd imagine your marketing will be lifted. You're just rolling out the webinars. So it's cool to see that you're constantly evolving and not just, man, I got 400 subscriptions, 650 clients. Like life is good. You're continuing to evolve, which is really cool to see.
Yeah, thank you for saying that. I mean, I would say we are obsessed with that. We're all very focused on our big kind of audacious goal is we want to serve 20,000 people. And we want to do that, in our lifetimes, right? So we want it to happen over the next 10 years. And that's going to require really reinventing ourselves multiple times. We have already had to do that. It was a very different way that we organized, our notes, that we organized our recommendations when we had 30 clients versus 150 clients. And now we're bringing on 30 subscriptions a month. And that's a whole nother level of growth that requires us to do things even differently to be able to maintain that, support that, and continue to provide a great client experience. So yeah, I would say every day we are thinking about what we can do to, continue to just get better.
And are you building the firm in such a way to where, because I think you said you had 7 advisors. Are you building the firm and the platform in such a way to where advisors can just plug in and be a part of the machine, so to speak? Because when you continue to grow at the rate that you're growing and even more, you're obviously going to need more bodies.
Yeah.
So is the thought to be able to allow advisors to plug in and sort of be fed to a certain degree, because you're doing so good of generating that business on the front end, or what's that longer term vision?
Yeah, I would say all advisors from day one have been, quote, fed. We've never asked anybody to generate their own business. That's something that I don't think most people feel great about, right? When you get hired, like that's kind of a turnoff, and I didn't want that. And we're doing well enough that we don't need that. So yeah, everybody gets fed. But to your other point, um, I've spent a lot of time specifically in the last 3 months of making sure that we have, a really, really great training program. So an advisor can come in and they can, as quickly as possible, be up to speed on just what's the Abundo way. How do we provide advice? And so I think we've done some really good work on that. Yeah.
Awesome. Well, I feel like I could pick your brain and trying to extract things around your journey for a very long time, but I do want to pivot. So I saw a post from an advisor a while back, which is what intrigued me to talk about this topic with you when I realized that it was one of the topics that we could unpack. And I'd be curious to know if you're in alignment with this or just your thoughts on this in general. So it was a video on Instagram where he said something to the effect, and I'm certainly going to misquote it slightly, but he said something to the effect of, hey, stop hoarding your credit card points. They're not earning any interest. Like, use them, right? You've collected them, use them. And we had talked about how you can leverage the benefits of your credit card points as a part of a financial plan. Unpack that for me. What do you mean by that?
Yeah. Well, in 2019, when I started Abundo, the initial, like, day one website was financial planning for travel lovers. That was really what I intended the focus of the business to be around, right? Financial planning, but really let's talk about travel. Um, and we've long since evolved from that, realizing that we've got about bigger opportunity and bigger potential beyond that. But we still have kept that travel flavor with our recommendations. And so not every client wants it, right? Not every client either A wants to travel, or B wants to play the points and miles game. But for the decent percentage of clients that do, we absolutely help them with that. So what we'll do is we'll recommend a credit card that fits within their spending pattern. So if they spend a lot on dining out, or if they spend a lot on groceries, if they spend a lot on shopping, whatever it is, right? We help them optimize what's the right card for you that's going to generate the highest point accrual. And then when it comes time for them to use those points, we coach them and help them on figuring out how do you do that, right? Where do you transfer your points to? How do you find flights? We actually built out in our client portal, we built out a travel lounge that's a really robust, like, how to. That's a resource for them to educate themselves on kind of between meetings. Um, and so, yeah, we send out, as part of our newsletter, we've got a whole section on, like, travel deals, travel updates. It's kind of fun. It's just something that I've been into for 10 years, points and miles. And I thought it would be something that more people would enjoy hearing about.
Yeah, it's cool. I feel like it's a good, for those who are interested in it, it's a good differentiator, because I feel like if you go online and, type in, credit card hacking or points hacking or whatever you word it as, there's so much noise out there from so many different providers, and being able to hear that advice from your advisor, I think is a nice little value add. And to a certain degree, when they hack it, right, and they are able to go on a trip for free or much lower cost than it otherwise would have been, you guys look like superheroes, right? And they're,
Yeah.
probably saying, yeah, my advisor helped me with it. And then boom, referral. So it's a
Yep.
good sort of related, but also kind of ancillary service that you're providing that has multiple benefits to the client, of course, and you guys in the firm.
Yeah. And we can help them do it responsibly, making sure that they're not overextending themselves. They're not getting into credit card debt, that any of that business that can occasionally happen if they're trying to say go it on their own.
And is this something that you said there's, something in your portal? Do you partner with another company to like aggregate that information, or is that something through your experience of doing this and the developer programmer that you have on your team has just built from the ground up?
Yeah, it's the latter. It's built entirely ourselves from the ground up. But I will say we actually now that we have more clients, we've developed a kind of an interesting, diverse client base. And one of our clients is owns a really prominent travel blog, and so we've thought about, and he's a big fan of what we do. So we've thought about maybe there's an opportunity to partner there somehow with him to help take on some of that upkeep for us.
It's so cool that I feel like more and more. So we talked about the potential of like a SaaS product with your tech stack that you've created. We've just talked about the potential of partnering on the travel hacking side of things, and I feel like the extent of diversification with the old school advisor back in the day, so to speak, is maybe they started scooping up rental properties, but that was the extent of their life outside of planning. And I feel like more advisors, and you're confirming this with this conversation, are just doing cool stuff outside of their practice, or potentially doing cool stuff outside of their practice. And I really enjoy and appreciate the entrepreneurial nature of the new group of advisors that are coming up. So it's really cool to see that on my end.
Yeah, I think you're spot on with that. I know a lot of other advisors who are doing some really neat things as well. Um, the the other thing I feel like I should mention that I've done with one of my team members, my co-founder, is we started the advice only network for advisors who are similar to us, who are getting started, and they don't manage assets directly. They don't have AUM. They just have that subscription model. We've created a platform for them to get found. If they want additional support, we've got compliance help, we've got marketing help, and so we're hoping to kind of foster a community there for like-minded advisors. So, yeah, the Advice Only Network is another kind of hobby side project that, to your point, we're noodling with.
Love it. And you have, I would imagine, the the team in place, as you kind of mentioned at the beginning of the conversation, to allow you the extra mental bandwidth and actual bandwidth to even think about these things. Whereas a lot of folks just get stuck in their business, and they can't, pun fully intended because of your background, but they can't rise their head above the clouds to kind of see the overarching. Sorry, I
Yeah.
had um, to see the overarching potential of what they're building. So it's just super cool to see. Have you done I'm kind of pivoting slightly. Have you had a focus or initiative or campaign around collecting client reviews?
Client reviews, like testimonial type reviews, or more
Yeah.
like a client survey?
Um, Testimonial, like social proof, public facing
Yeah.
reviews.
Yeah. Another thing I would say we haven't been great at. You know, we definitely have reviews. We have, I think, 50 or something Google reviews, and we use Wealth Tender to provide the uh, disclosures for those to be compliant. So we have reviews. We love reviews, of course, right? Those are super,
Mm-hmm.
super valuable. but we can always get better at asking for them, and I think we probably don't have as many reviews as we should given the size of our firm and
Mm.
how many clients we're adding. So that's something that we've talked about as a team of trying to get more focused over the course of the next year on that.
Yeah, I think so. I have a client, Jerry, probably has, I don't know, he's AUM based, probably has 150 clients. And when he started his initiative, he collected something like 54 reviews in a few weeks.
Yeah.
And he used Wealth Tender as well. I'm good friends with Brian Thorpe and very impressed with what he's built over there. Um, but that's on 150 some odd relationships.
Mm-hmm.
I would love to see you. I mean, just imagine someone who's thinking about working with you. If they hop on, they see 250, 300 5-star review, like game over. They're doing business with you.
Right. Right.
Never mind when you get to 20,000 subscriptions as your BHAG goal that you have. So yeah, I'm going to be very curious and kind of spot checking and seeing what you're doing, because I'm fascinated, what you've been able to do in such a short period of time, and I can appreciate the humbleness that you have and not giving yourself too much credit, but also you've done a lot of work and you've built something special, and it seems as if it's positioned to scale. So I'll be checking up on you and seeing how the journey's going.
Well, thank you. I would say the only thing I'll pat myself on the back for is hiring a great team. We have truly like the best team I could ever ask for. And without them, we wouldn't be anywhere near where we are. I mean, they've all come with just great energy and ideas and have done a fantastic job serving their clients and helping kind of further the mission.
Love it. So one of the things that I ask all of our guests that come on the show as a way to distill a reading list for our audience is a book that's had an impact on them. And the book that you had mentioned is Good to Great by Jim Collins. I've certainly and personally view that as like a staple book that maybe should be reviewed every year, every other year, or something like that. But why'd you pick that book, and what's the impact that it's had on you and sort of the
Yeah.
direction that it's given you?
Yeah. I'm not a huge reader. Um, but that is a book that I did read a couple years ago and just really, really helped, I think, shape our focus. And what I specifically pulled out of that is, a couple years ago, we were starting to really develop our tech, and it was awesome. Like we felt like it was really, really cool technology. It was benefiting us, it was benefiting our clients, and we thought, gosh, like we could just become a tech company, right? And that book really helped us define like what can we actually be the best in the world at, right? What can you be better than anybody else at? And realized we were never going to be the best tech company. We could get killed quickly by by investor backed companies and et cetera, et cetera. But we realized we actually had a shot at being the best in the world at providing high quality, very low cost, comprehensive financial planning, human driven.
Mm-hmm.
And so, we really, I think, doubled our focus to figure out, okay, how can tech support the advisor relationship and help us scale, help us keep our costs low to allow the advisors to really shine. And that has worked out for us. And so, I think we're still on that path, and it still kind of realigns us every day to say, yeah, like we can be the best at that. And we are doing a really great job of keeping our costs very low, and we want to actually lower them as we continue to scale. And we're doing it profitably, and that's hard, but we're doing it. And other people have had a hard time of doing that. And so, we're checking all the boxes, and that I think that book has really helped frame that for us.
Love it. So before we sign off, and I want you to share, hey, if people want to learn more about you or follow along with your journey, or as we mentioned before, they have someone who's not a fit for them and they want to send it your way, we'll give you an opportunity, of course, to plug that. But I also want to make mention So we're recording this on January 18th, and I believe it's being released on January 30th. But just a couple weeks after that, you're recording an episode with Michael Kitces. So if you're listening to this, I'd imagine you're aware of Michael Kitces and his podcast, but would encourage you to go and check that out, support Michael, and support Eric as well. So certainly keep an eye out for that. But if I'm an advisor and I want to be a part of your journey from the outside looking in, maybe I'm interested in joining the firm in some way, shape, or form. When you're bringing on more folks, how do I get in contact with you?
Yeah. Thank you, David. First and foremost, if you're an advisor, we would love to be a potential landing spot for clients or prospects that just maybe aren't a perfect fit for your business. We really pride ourselves on taking good care of those folks and making you look good. So that I would love to be considered for that. If maybe you're a new advisor or even a seasoned advisor, but you're looking to join a team, and you really feel like you're resonating with what we're doing, please visit us on our website, www.abundowealth.com. We are going to be adding here very soon a careers page to the site. So you can hop on there, learn more about our mission, what we're trying to do as a team. And if you want to follow our social media journey, you can visit us on, Instagram, on X, on LinkedIn. I think we even have a Pinterest now, all the different social media platforms. So whatever one you're on, you can find us there.
Awesome. Well, Eric, this has been a pleasure. And for everyone listening, appreciate, as always, your time and attention. A couple months ago, we crossed over 110,000 total downloads. So it's mind-boggling to me that that many of you pay attention. So thank you so much. And if you would be so kind as to take a moment, leave a review for us, we'd really appreciate that. And this, in my opinion, is definitely an episode worth sharing as well. So again, Eric, thank you very much for your time. I'm excited to see where you take this thing, and having been a slight piece of your journey in recording this. So thank you for your time, and crush it, man.
Yeah. Thank you, David.